We currently have a team tasked with finding a location to establish a manufacturing facility in Mexico. We hope to make an official announcement about our plan to invest in Mexico by the second half of this year. Our goal is to build a facility in the south or central region that will only serve the Mexican market. It is not our intention to build a manufacturer to support us. We have no plans to travel to the US at this time. The reason for this is that, while the market is interesting, it is very complicated when it comes to the EV brand. Additionally, I believe that the US market is a little slow to electrify and is quite confusing rivalry and emergence. Consider that Victoria has a strong chance of succeeding elsewhere. This bid is in direct competition with Tesla in China, but that doesn't take away from Tesla's accomplishments. In fact, Tesla recently concluded what appears to be a record quarter in China. Imagine these two titans of the electric vehicle industry coming together. It sounds like something out of science fiction, but buckle up. This scenario might not be as unlikely as you think. Before we get into the specifics of this, please make sure to show your support by liking this video and subscribing to our channel. This is Tesla Insights. With that said, let's get this video started. This surprising relationship raises the possibility that both sides could find advantages in working together. But how would this alliance help them specifically, and what might it signify for Tesla's stock price and valuation? Let's investigate these options. But before we do, don't neglect to hit those like additionally to subscribe buttons. A BYD representative recently voiced concerns about joining the US market, pointing out its complexity and mentioning things like murky regulations, expensive infrastructure, and a plethora of options for consumers. On the other hand, despite the difficulties, the Chinese government's strong push for electric vehicles urges businesses to invest or risk falling behind. They also emphasize the significance of an open market and fair competition values, which are essential to the U.S. market. American automakers are taking notice of Chinese automakers as they are creating waves in areas such as Mexico. Concerns regarding the competitive threat posed by Chinese automakers have been expressed by industry luminaries like Elon Musk and executives from Ford and Stellantis. But can Chinese businesses really compete fairly and even take the lead in the market in the absence of trade barriers? Let's look at it from another perspective. For example, instead of entering the U.S. market, BYD has invested in manufacturing in Mexico with the goal of catering to the local client base. In light of automotive history, it is possible that concerns about Chinese competition in the electric car market are overblown. In the meantime, Tesla's profit margins are under pressure and may continue this trend for a few months despite some remaining bullish sentiments. When Japanese brands entered the U.S. market decades ago, similar fears arose, but local brands managed to thrive alongside foreign competition. This year, Tesla's profitability may decline, frustrating a lot of investors. However, what if the company decides to change things up to boost the value of its stock? Imagine that they team up with their main competitor to forge a revolutionary collaboration in the field of electric vehicles and automobiles, beyond merely batteries. A partnership between Tesla and BYD might lead the way in developing autonomous driving, battery technology, and other important EV development areas. Together, they could drastically reduce production costs, increasing the accessibility of EVs to a larger market. This show of support could solidify their leadership in the EV market and accelerate the transition away from gas-powered cars. But let's get right to the point. How will this partnership affect Tesla's stock price and valuation? It's not a sure thing. Obviously, internal resistance within both companies and the challenge of striking the right balance between collaboration and competition could pose obstacles. But a well-structured partnership could be a game-changer for the EV industry, benefiting both Tesla and BYD while propelling the global transition towards sustainable transportation. The potential gains from partnering with BYD are enormous. An optimistic outlook could support Tesla's stock price. Additionally, the collaboration could result in increased market share and accelerated growth, solidifying Tesla's position as a front-runner in the EV revolution and possibly leading to a higher valuation. In other news, the leading EV manufacturer, BYD, has officially introduced the U9, an ultra-luxury sports car, under this latest offering from BYD, which is priced at a hefty 1.68 million yuan, or $233,000 in China, highlights the company's strategy to compete at every price point. This strategy allowed BYD to overtake Tesla as the largest EV maker last year. Additionally, we received statements from TSLA, the executive vice president and CEO of BYD America, delving into the company's evolution and its ambitions. According to BYD, there are comparable EV adoption trends outside of China in nations like Brazil. Lee expressed confidence in BYD's ability to compete in Thailand and Israel, citing their success in China's fiercely competitive market as a strong indicator for international expansion. She also emphasized BYD's focus on innovation, positioning the company as a technology leader alongside offering stylish and modern designs. These markets echo China's trajectory over the past 10 years. While in Mexico, BYD intends to announce its plans for a facility in the second half of this year targeting the south or central region to support the Mexican market. Meanwhile, despite Tesla's recent stock decline, some investors see an opportunity in the company's broader technology initiatives. Lee revealed plans for manufacturing facilities in Hungary and Thailand, with Brazil already in progress. Beyond EVs, particularly considering the pricing now in comparison to a few years ago, although not all experts are as upbeat as they are, Mark Cotton, an investment director at JAM Investments, predicts that a number of obstacles, such as price reductions and possible declines in demand, Tesla's exceptional profit margins, which attest to its operational efficiency in 2022, set it apart from its counterparts in the automotive industry. The business brought in $81.5 billion in revenue overall, with an outstanding $13.7 billion in operating profits, or a healthy 16.8% margin. This is in sharp contrast to its U.S. competitors, such as General Motors and Ford, who usually have single-digit margins. Tesla's profitability is attributed to a number of factors. Firstly, its well-known brand eliminates the need for massive advertising costs. Additionally, effective manpower management has increased battery production capacity through vertical integration, optimized manufacturing processes, and avoided dealership networks by selling directly to consumers. These tactics boost earnings and increase margins. Tesla is at the forefront of AI-powered self-driving software and is set to enter the autonomous robot taxi industry by 2024. According to early predictions by ARK Invest, self-driving cars might open up a $14 trillion market by 2027, which would further fuel Tesla's growth. Demand for Tesla's a line of residential solar and battery storage products has increased, with deployments of battery storage capacity rising by 360% year-over-year in Q1 of this year. Tesla, despite differing perspectives on the Cybertruck's design, it may diversify its offers by 2027 by launching the Optimus humanoid robot, which would cater to low-skilled work areas like manufacturing. The Tesla, as the electric vehicle business grows, innovators like Alex Shannon from San Diego, targets for Tesla stock price innovation from Tesla and everything Elon Musk avoids the mainstream media's negativity toward Tesla. The greatest place to get pro-Tesla news online is Seeking Alpha. Now that we've discussed Tesla's creative tactics, please note that by clicking on the affiliate links in the description and making a purchase, our channel may receive a commission. Thank you for your support generating its profits. We've examined Tesla's diversification into a number of industries, from AI-powered self-driving software to residential solar and battery storage solutions, as well as its possible partnership with BYD and the evolving electric vehicle market. Furthermore, we've talked about BYD's recent reveal of the electric supercar, the U9, and its effects on the market. What are your thoughts on Tesla's prospects for long-term growth? Do you think working with BYD could encourage Tesla's domination in the EV market? By sharing your thoughts in the comments section below. If you found this video to be educational, don't forget to hit the like button. We appreciate you watching, and we'll see you in the future video. Please subscribe to Tesla Insights for additional updates.